Okay, so we are going to jump right into the analysis. We are starting with the crude oil futures January 2026 contract, and we are starting on the weekly time frame. So what I want you to do is to follow me and make sure that you have your levels marked up, so that way your chart can look just like mine. Okay, and talking about trading view charts before we get started, do not miss out on this upcoming Cyber Monday. So if you have TradingView and you want to reduce 80% to extend your platform and your subscription, there's going to be a link in the video description that's also going to give you an additional $15 off. So don't forget, you can save huge on this Monday with 70% off the premium package, which is the one that I currently have for my TradingView subscription. So don't forget to take advantage of that opportunity, because it's about saving money and investing right. So here we are on the weekly time frame. We continue to see crude oil descend in a downward direction. We have been talking about that for quite a while. Now, as we move over to the daily, I do want you to pay attention to this trend line. And if you're inside of our trading club, we've talked about this last week, and congratulations to those of you that on Friday who decided to trade, took a sell off the rejection of that trendline area and also a Fibonacci area. Now, I do want you to keep in mind, okay, watch out for news. And what I mean by watch out for news is there is some reporting going on over the weekend about some type of oil and energy sectors that were struck between Russia and Ukraine. I believe they were struck in the Ukraine area. Whether that will have an impact or not, we do not know. So keep an eye out for that. And then also watch out for Sunday gap. So as you know, crude oil could have the potential to gap up or down significantly, especially if there was some type of oil issue in another country. Then that can cause a gap. So this analysis is basically taking out any of this possibility here, just strictly pure technical analysis. So based on what we see here, we definitely have to continue the trend on just looking for short opportunities with crude oil. Okay, this 56 has been our floor. Okay, we talked about this in last week's video. You want to avoid, when at all possible, right, looking for the buys, because the buys are a lot more controversial than the sells. The sells have been very easy to spot in these Fibonacci areas. Right here, another one, right here, another one, right here, another one, right here, another one. So it is much easier to just let the pullback happen and then grab that retracement back down in these areas. Okay, as we drop into the 8-hour analysis, let's take a look at this candle that closed. Okay, and again, we were in a kind of a shortened trading week. That 8-hour candle closed in a bearish state. Okay, so because that candle closed in a bearish state, we assume, right, barring any gaps, that we are going to continue at least further back down to the downside. And this would probably be a pretty significant target, unless we gap up, looking for price to come back down to about 57.60 or so. Okay, right back down to that level, which would also give us about an 88 on the Fibonacci level. And once you've been doing this for a while, right, you can just kind of see it with your eyes. So this is where, we could see another bounce potentially, or if they are going to come back down to grab full liquidity of this candle that's sitting back here at around 56.50. So long story short is we want to remain bearish on crude oil. Now, let me give you a possibility on this scenario here. If we do have a major gap up, okay, I'm going to go ahead and wipe this out here real quick. If we do have a major, let's go ahead and get rid of the drawings. If we do have a major gap, okay, let's say gap price does gap up to the top side. Let's go ahead and put a green candle. Okay, so there's news that comes out and price does gap up. Well, then that's why it's important to know these levels here. We might see a rejection here. Okay, and let me turn this, another one here. Okay, let me turn this white. And then let me turn this white as well. Okay, so we're looking then, if we do gap up and we do see price heading back up here, then we are looking for the next sell, okay, at this Fibonacci level right here. Okay, we would take these fibs, and then again, we would look for some type of reaction near this 88. Okay, so this in essence, if that scenario does play out, we get the teacup, and then we get the handle back down. Okay, but that scenario is only if we end up going higher than 61. Okay, again, we talked about this in the last few videos as well. You know, I believe 60 right around here should be a pretty good median as to where we close price for 2025. So not expecting some wild plays here, but we are expecting price to probably continue somewhere between this 65 level and this floor here of 56 or so. So I think this is going to be our playing field for the rest of the year. So again, if price does come back down to this area, this is where you look for buys, okay? And vice versa, if we do come up here, we look for sells. But I think we are going to settle somewhere right around that $60 mark, okay? Trading in these areas here could be very choppy, and unless you're scalping and you know what to do, it could be very confusing. Now, we do take small trades in here in the trading club, so if you need some help, you can definitely visit the website and take advantage of 50% off, which is ending now on December 3rd. So you can come in, hang out with us for a month and see if we can give you some value to stick around with us until 2026 and beyond. Okay, so I hope you got some value on this video. If you did, smash the like button for me. If you're brand new, subscribe and turn on your notifications so you don't miss out on any videos. Thanks for watching.